Good morning, traders, and welcome to the live stream. My name is Charles. I am from a community called Pirate Traders, where we are focused on the ESDNQ and how they move through the two-way auction process. I appreciate you guys being here this morning. If you have any questions, let me know in the chat, and I will be happy to answer them for you, as well as in the Discord. If you're watching from the Discord today, you can go to the Futures-Charles tab and leave your questions there, and I will get to them as quick as I can. All right, so what are we looking at here on the chart, and what are we expecting to take place in the market today? Well, the chart that you see over here on the left side of my screen, this is a market profile chart. So this basically just takes the same information that you would see on a candlestick chart, and it displays it in 3D. It shows you a three-dimensional view of things so that you can better understand where the market is doing business and what kind of business it's doing. So what do I mean by that? Where is the market doing business and what kind of business is it doing? Well, where price goes doesn't really matter. The price can go up. It doesn't mean that it's going to keep going up. Or the price can go down. It doesn't mean it's going to keep going down. It's about what happens when it gets to that new level. If a price goes down and no one's willing to go short, what is it going to do? It's going to turn around and start going back up. So looking at the market profile allows us to see in real time, do we have new buyers or sellers at particular levels so that we can figure out what's the next level the market is going to and therefore enter trades. On the right side of the screen over here, I have Bookmap. Bookmap is order flow software. So what this is allowing me to see is where are the orders that are actually in the order books right now at this exact moment. Okay. Now, order flow is constantly changing. They're constantly adding orders and pulling orders. People are changing their minds. Bots are recalculating. Things are constantly happening with the order flow. So seeing where those changes take place is the best edge we have in order flow. Okay. Because if we can recognize changes as they're happening in real time, we can look for what's going to happen next. So if you look at the chart over here on the left, and you're seeing all these different colors, right? You're seeing little areas where there is orange and red and blue and black. That is what we call the heat map. And this is kind of the magic of using Bookmap, is that it allows you to see how those orders are changing in real time. So on the right side of the screen, that's the current order book. That's where the orders are right now at this moment. On the left side, that's what it has been throughout time. So you can see how those orders are changing. There was a lot of resistance above the market, and then they're adding more and more and more down here. There was nothing below market, but now they're starting to add support under there. So we can start to see what are the potential ranges that the market might be trading inside of based on where the liquidity is. And then also when it changes. A sudden change in liquidity allows us to see that maybe this range is going to change and we're going to go somewhere new. So I'm going to go ahead and do right now what I call the top-down approach. I learned this from Jim Dalton. The idea is simply that, you're starting a new week. You're trying to prime your brain for the day. You're trying to be ready to understand what the market does today. The best thing you can do is zoom all the way out and start looking at monthly candlesticks, then look at weekly, then look at daily, then zoom in and look at what's been happening intraday with the market profile and the Bookmap, and then try to make an analysis based on that. By starting with that bigger picture view, we might notice insights that make the market make sense on a lower time frame. We might not, but let's find out. So we are going to start with the monthly chart. Gonna go to the monthly candles. All right. So if we're looking at the monthly candles right now, what are we seeing? Well, they look pretty bullish, right? The market had this massive wick on the low of the monthly. So that is a sign of, strong hand buyers stepping in and reversing momentum. Okay. So from there, what did the market start to do? It started to do what we call one-time framing. One-time framing basically just means the market's making higher highs, right? It's continuing to push higher. It's holding higher lows. It's continuing not to have to dip lower. So that is a sign of momentum up. If the market is able to push up and it doesn't have to come all the way back down, and push up and it doesn't have to come all the way back down, that is momentum. And that means that the momentum is likely to continue. We like to think about momentum like it's a speeding train. It doesn't just suddenly stop, right? It keeps going and then it slowly kind of comes to an end. If you look here, what do you have? Big wick on the monthly. You start one time framing higher, right? You're still holding those higher highs and holding those lows. And then all of a sudden you get an engulfing candle. And so it takes 3 months for the market to roll over and then start the pullback, right? So that is the way it normally works. As long as you have momentum, you keep going. And when that momentum comes to an end, it'll roll over and reverse back down. So we'll have some time to figure out that the momentum is coming to an end. So looking at the chart right now on the monthly time frame, we still have momentum, right? We have a higher high for this month than last month, barely, but we do have it, and we have a higher low. So there's no reason to assume that the market can't keep going to the upside. Looking purely at the monthly candles, the next target to the upside is the all-time highs. Okay, so looking purely at the monthly, there's no reason why we can't go make new all-time highs. Now, obviously, I don't mean today, but I mean in the weeks or months ahead. Okay, so now let's take a look at the weekly. See if we can get any context from this that might add to our, view of the monthly chart. Okay, well, now we can see a lot more detail on this move up. We can see we've had multiple times where we ran out of steam, needed a big dip, brought in new buyers. What we are now breaking out of is a weekly balance. So for multiple weeks, for essentially 4 weeks, because we just broke out at the end of last week. So for essentially almost 4 full weeks, we were stuck in a range. We were bouncing. We were doing this right here, going sideways. Okay. But at the end of last week on Friday, we broke out of that range to the upside. And what we always think about is the fact that when you have balance, it often leads to momentum to the upside. Also, you tend to get a move that is about the size of the range. So it would not be unreasonable for the market, once again, to be able to get to all-time highs if we can keep the momentum going this week. What would be the definition of keeping momentum going this week? We got to get above last week's high. Okay, that would be step 1. And then the other thing is we'd have to stay above last week's low. That would be step 2. And as long as we can do both those things, there's no reason we can't head up to those all-time highs. So far, things are looking bullish. We know we need to start keeping an eye on last week's high and low this week, but otherwise things look good. All right, let's zoom in and take a look at the daily chart. So again, same thing there, but even more zoomed in. Let me get real zoomed in here. Okay. So this was that longer term balance on the weekly time frame. We also had balance on a multi-day time frame where the market was going sideways. Okay. And again, we broke out of that balance on Friday. That is bullish to see, assuming the market wants to keep going higher because it broke the high, not the low. The market also had an opportunity last week to do what we call a look above and fail of this weekly balance. Okay. So on this weekly balance that we have right here, which is this blue box that you see, they poked above it last week and came back in. That can cause the market to go all the way to the opposite end. The fact that they did not, also bullish, also a sign of momentum to the upside. So far, everything's looking bullish. As long as we can keep it going, as long as we can make a higher high today than Friday's high, as long as we can stay above Friday's low, everything's looking bullish. It's looking good. All right, so now let's zoom in even more. And let's take a look at the market profile chart to give us some more detailed insights about what's going on. So we can see the balance that the market was doing. We can see the breakout, but what do we recognize in the way that the market traded on Friday? Okay. First off, we have a bell-shaped curve. Imagine it's like a bell that's on its side. Ding, 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 like that. Okay. You got a bell-shaped curve in terms of the auction process, meaning we spent a majority of the time in the middle of the range and brought in a majority of the volume in the middle of the range. As we worked our way up towards the edges of the range, we ran out of steam and reversed back in. Okay. So as we pushed higher, we ran out of people willing to go long. So the market had to come back down. It had to dip to bring in longs. As we tried to take the market lower, we brought in buyers to reverse it back up. We ran out of sellers at the low. So that is a sign that the market is not going anywhere. It's a sign of balance. It's a sign that the market isn't ready to make whatever that next move is. So essentially, the market told us what the next move is, which is to the upside, but it also told us it's not ready to make that move right now. It's not ready yet. So, of course, at the end of the day on Friday, we're asking ourselves, what's going to happen over the weekend, right? Could those overnight traders take the market higher? So what did they do? They did not take the market higher. They just balanced inside of Friday's range all weekend long. So that is, again, a sign. It's not bearish. If it was bearish, they would have went and made lower lows, right? Nobody's trying to sell this market and take it down, but we also don't really have enough buyers to get it higher yet. So this morning, we are set up for a lot of chop and grind. My guess would be that the market is going to spend some time, in between this range right here. We'll call it, 60-20 on the upside, and we'll call it 59.96 on the downside. And that's basically an area that we'll look at as a chop zone, an area where the market is probably just going to keep doing what it did all weekend long. It'll go up and come down and go up and come down and drive us all mad. It looks like it's going to break lower and it comes back up. Oh my God, it's going to the moon. Nope, comes back down. It's going to be very volatile and it's going to move around a lot. But because we have all these clear signals of what the market is trying to do, the market is trying to go higher. Every single technical signal I just gave you, except for that one, except for the fact that we're going sideways for the weekend. Other than that, every single signal is bullish. Every single thing is saying the market is going to go up. And that's a great thing for us as traders because it tells us, okay, we may not know when the next move is going to happen, but we will know what the next move is going to be because either it's going to keep going up as expected, or if it doesn't, it becomes what we call a when what should happens doesn't. And when all the technical information is sort of pointing in one direction, it's saying the market's going to go up or down, and then suddenly that the opposite happens, the complete opposite is what's going on. So if the market today were to get above yesterday's high, Friday's high, we would know it's going to keep going higher, right? We're still one time framing. We broke out of balance. We have the momentum. We have it on the monthly. We have it on the weekly. We have it on the daily. We have momentum up on every time frame. So if we go make a higher high today, what does the market want to do? It wants to go higher, right? And same thing if we make a lower low. If the market gets below Friday's low today, then we had buyers on the monthly, buyers on the weekly, buyers on the daily. We had buyers and buyers and buyers pushing it up. And guess what's going to happen to all those buyers if suddenly we make a new low today and we get below Friday's low? They're going to exit their trades. They're going to get squeezed, and that is going to cause the market to sell back off much lower. So we can pretty much say inside this overnight range, okay? So between the overnight high and the overnight low, we don't know what the market's going to do. We don't know which way it's going to break. We don't know when it's going to do it. We kind of have no idea what's going to happen in here. But if we get above that overnight high and we get new buying, we know there's very high probability the market is going to continue to the upside. And if it gets below that overnight low and gets new selling, there's a very high probability that we're going to go lower. So that is the main area of focus for me this morning. Okay. Now, also something that is worth noting, it's not a big deal this morning in particular, but the overnight inventory is net long as of now. We still have 15 minutes till the market opens, but that just means there were slightly more buyers in the market over the weekend than sellers. That is also important information. So, what happens at that overnight high will give us an even better insight. So think about it like this. If a majority of the traders are long from the weekend, and the market pushes up and it gets to that overnight high, and let's say it finds support there, what are those longs, which are a majority of the traders from over the weekend, what are they going to do? Nothing, right? If we get above the overnight high and we get support, they're going to stay in their trades because they want to make more money off of it. So that could lead to a much bigger move to the upside. But if we get to the overnight high and we fail and we pull back in below the opening price, what are those overnight longs going to do? They're going to get squeezed, right? So that's also an important insight to keep in mind. As of now, there are more longs in the market. More of the current business is net long. And so we may need to adjust that first, or we may just join the party, right? We may force those longs from the weekend to get squeezed, then the day time frame goes higher, or we may just say, listen, we're going to chase price. You guys already started the move. And that is what we will figure out at the overnight high. Now, when I talk about the overnight high or the overnight low as like really important levels, it's never like exactly to a tick the literal overnight high, which is, 1950, right? It's not going to be exactly to a tick that level. It's really just this general area, right? I would say, give it a 4 to 5 point range. That's going to be your area where you potentially are looking for the market to find support, which is bullish, or not, which is bearish. Okay. If the market opens this morning and it immediately starts to sell off, that is just cleaning up that overnight inventory. That is just getting rid of all those extra longs in the market. So it is not bearish unless it gets down here below this node around 94 and then gets new selling. Okay. So, no one likes not knowing which way the market is going to go and having to sit and wait for a while. But I think that is probably the best way to play it this morning. Let's let them chop it up. Let's let them grind it around. If this market is going to go higher, it is going to go a lot higher. Okay. There is no reason on earth. If we get new buying above yesterday's high, which is at 60.25, there's no reason we can't make it to 60.43, which is the first level that is in need of a test. So you can think about this like there's a magnet right here. Now, this magnet isn't strong enough to force price to go up. But if you have momentum, if that train is chugging along, that's the next stop. Okay. Is 60.43. So if the market can get above the overnight high today and find support, that can be the signal that tells us the market is likely to go higher. At that point, anywhere we go long, we can buy support. We can assume a good target to the upside is going to be this area around 60.43, that they should be able to get up there. Now, not in a straight line. We got a little bit of resistance around 60.30. So we may have to do a bit of poking and grinding to kind of get through there. But if we do, 60.43 is the move to the upside. So from the overnight high, that's almost 20 points. There's a lot of money that can be made on a 20-point range, depending on how many contracts you trade. So there's no reason to feel like you have to get long first thing in the morning right now when the opening bell rings. And you might be saying to yourself, but Charles, that's an extra 10 points, right? Don't I want to be long for that extra 10 points? No. I would rather be long for a 20-point move with a high probability of success than long for a 30-point move where you have no fucking clue if it's going to work or not. You know what I'm saying? Like, it's just, what kind of trader do you want to be? Do you want to be the gambler that's guessing, hoping for those big maximum returns? Or do you want to be the trader that is using technical analysis and honing their own intuition and being disciplined to know it's better to wait for the A+ setup that is going to have a higher probability of working, even if it's slightly fewer points. And you can always size up into that if you feel confident. Any questions on any of that from the chat? Once again, if you're watching on the Discord, just head up to the Futures-Charles tab, and I will answer your questions there. Rich in the house, good morning to you. Trevor is here. Welcome, welcome. Percy in the house. Griff is with us. Thomas here. It's Pirate Monday. It's Pirate Monday. Griff is here. Good morning to you. Jason, welcome, welcome. He says, I'm looking sharp. Ooh, thank you. I did not do anything. This is just me. I combed my hair. That's what it is. My hair is greasy and I combed it. And so I look good. Looks like I put goop in. I did not. Jay in the house. Good morning to you. Happy Monday in the trading paradise. Billy K is here. Will in the house. Soru. He says, which is better, volume profile or market profile? One of my favorite questions. So yeah, the way I think about what is better, volume profile or market profile, is that volume profile is part of market profile. So volume profile is basically just studying what are the levels where the market does the most volume, right? Like, where is the most business take place? What market profile does is it also studies where the market, brings in the most volume, but it adds the nuance of time, right? It adds time to the equation. And this is where the edge really comes from, combining those two. And for the people that are in the brigade, for the members of my community that are watching right now, they're about to be very upset that I'm going to do this analogy because they've heard it a million times before, but just stick with me here to make sense of this. Okay. How does an auction work, an art auction? The auctioneer starts the bidding, right? This painting is worth $1,000. Let's start the bidding at 1,000. And he starts the bidding. In the beginning, lots and lots of hands go up in the air, right? Lots of people want to bid. 5, 10 hands go up in the air at $1,000. So what does he do? He lifts the bid. All right, 1,100. I have 1,100. Do I have 12? I have 12. In the beginning, he's going very, very fast. The tempo is very fast. I have 1,100. Do I have 12? Do I have 12? Do I have 13? 13. I have 14. Do I have 1,400? Do I have 1,500? 1,500 over here. Do I have 16? 1,600 over here. 17. 1,700. He's going as quick as he can. So that's tempo. We need to be able to understand when there's changes in tempo, because as he goes further and further up, what does that auctioneer have to do? He has to slow things down, right? He has to be like, I have 1,800. Do I have 19? 19? 19. I have 1,900. Do I have 2,000? 2,000 from anyone here. 2,000 from the gentleman in the shirt. 2,100. 2,100. Anyone? Going for 2,000 once? Going twice? Sold. You see how he has to slow things down, because as he's running out of people that are willing to bid at these higher prices, he's trying to give them time to think about it and make a decision. Are you sure? Are you absolutely sure? Whereas when there's a lot of volume, when there's tons of hands going up in the air, he wants to do the opposite. He wants to move very fast. He wants to be like, we're going to 1,100, we're 12, 12 is 13, because he doesn't want to give anyone time to think about it. He wants them just throwing their hands up in the air, getting so excited because everybody else is throwing their hands up in the air. And that person, they want that painting and they don't want the other person to get it. So they're all just doing it. So volume is very important, right? When you're earlier on in that auction process, there's lots of hands going up. So as you see that volume tapering off, as you see fewer and fewer people willing to bid, you can recognize that that auction is coming to an end. It's going to be done going up, right? But you also need to pay attention to tempo. You also need to pay attention to time. How long does the auctioneer spend at that level? I have 2,000. Do I have 21? 21 anyone, sir? 21. The more time that he spends there, the more of an opportunity for people to come in. So what we want to focus on as traders is, where does the price go? What is the bid? What is the price level that we're at? And then how much time do we spend there? And how much volume do we bring in? Now, the thing that is different with the stock market, as with, an art auction, is that in an art auction, there's one painting. So it's just one auction and it happens and it's over. The stock market is an endless, continuous two-way auction process where the price auctions up as high as it can go, letting buyers pay the highest price they're willing to pay. And then it auctions down until sellers will sell for the lowest price that they're willing to sell. And then it turns around and goes back up. It's this continuous two-way auction. So what we're looking for is, where are the levels that happens? So if you're looking at the market profile right now from Friday and the weekend, what do we notice? Lots of volume in here, but great. What does that mean? Well, volume is tapering off up here and tapering off. There's less and less the higher we go. So that auction is coming to an end as we get up to these levels. No one's willing to go long up there, right? So what does that auction do? It comes back down. By being able to see what happens with time, we can predict what will happen with volume. So for example, let's say today the market opens and it pushes above yesterday's high. Great. We got the auction up there, but what happens when we get up there? If we just immediately reverse back down, if we don't spend any time, guess what price is going to do? It's going to keep going down, right? But if we're able to stay up there and spend some time up there, what does that give people a chance to do? To think about it and decide, do they really want to go long up here? And if they decide they do, guess what the market's going to do? It's going to go higher. So we look for these levels. This is why I just, in my first, analysis, I said the first important level is this overnight high right here. Why? That's where we ran out of time and volume and reverse back down. So if we can get up there today and stay up there, spend time up there, it means we have a chance to keep going higher. If we spend time up there and we see volume coming in up there, well, then we have enough confidence to enter the trade. And so that's where our edge is. Our edge is in recognizing these areas where you run out of both time and volume previously, and then observing what happens in real time today as the market gets to those levels. Does it bring in that new buying or not? Because if it does, it's going to keep going higher. And if it doesn't, it's going to turn around and come back down. That's what the market is always doing every minute of every day. It's just searching for people willing to raise their hand and do some business. So it's my favorite question. What's better, volume profile or market profile? Do you want half the information or do you want all of it, right? You also need to understand time. It's a good question to start the day. Ashwin is here. Good morning to you. Grizzly Bull in the house. Welcome, welcome. Craig says, what add-ons are you using with Bookmap? So I have the MBO bundle, and my main focus is the Stops and Icebergs add-on, which you can see over here on this chart. That is basically the main thing that I'm using. I also like this volume pressure imbalance indicator on the market pulse. That one is also very, very handy. So you will see me throughout the day clicking back and forth between this screen and this screen. They are both the ES, as you can see if you look at the tabs. It's just this one over here filters out some of the market makers bracket bots. You can see that there's these brackets on here that they just kind of stick in there to confuse the order flow. So on that chart, I'm watching the Stops and Icebergs, and on the other chart, I'm watching the order flow to see where those orders are and how they change over time. The market opens in 3 minutes. Any more questions? Any questions? All right. So yeah, as I said, what I'm predicting for the first, 30 minutes to hour of the market is I'm expecting the market to kind of chop around inside this overnight range, spend some time going sideways, because what does time do? It gives traders a chance to make up their mind and decide, do they think the market's going up or down today? So it'll spend as long as it works. If it goes down a little and people start buying, it'll go back up. If people start selling, it'll go back down. If people start buying, it'll go back up, and it'll just keep chopping around until someone takes control of the market, until there are either more buyers or more sellers. Then we'll break the overnight high or overnight low. And again, I just want to caution people, if we immediately open and push right to the overnight high, the overnight inventory is net long, so that's a great place for it to reverse and come back down. So we want to feel confident we're seeing that new buying up there before we get bullish. Market opens in 2 minutes. 2 minutes to paradise. Wamp, wamp. Man, I was smoking crack on Friday when I wrote these levels. I got the dates, wrong on every level. There we go. Fixed it. We got a question here. Do you use low volume composites as resistance or support? So no, generally when it comes to low volume areas, I assume the market is going to pass right through them. It's the large volume on the other side that is the support or resistance. So for example, let's say, we obviously it's different because of yesterday's range, but let's say we just were looking at the overnight range from the weekend. If we start to sell off below these large nodes, we should be able to get to these nodes pretty easily, this large node down here. And that's where I would expect the market to bounce. So the market passes through low volume nodes very easily, and then it's kind of slows down at the larger volume nodes and tries to decide what's next. So a lot of times if you are looking for a trade, you want to find those low volume nodes, because if you're short, you want to be taking profits on the other side of it. Or if you're waiting to get long, you want to wait to get through that low volume node and then get long, because it can pass through quite easily. All right, the market is open. Let the chop begin. Ba-da-dun-dun-dun. So I'm going to go ahead and just take a quick look at the NQ and see if there's any differences in the two markets. They've been a little bit, a little separated last week. So let's take a look. Yeah, okay. So remember how we started the day talking about the ES? One of the reasons why I'm so bullish is that on multiple time frames, it is breaking out to the upside. It is going from a position of balance to a position of momentum. Okay, and as long as we can keep that momentum going, we should assume it's going to keep going higher. The NQ is not, however, in that same exact situation. The NQ is still in balance. Okay, this is just one very funky, very large balance area. Okay, so it is not really until we can make a higher high on the daily that we could be as bullish on the Q as we are on the ES. So that is furthermore reason for the market to chop around this morning while we convince some NQ traders to get bullish, y'all. Were you at NQ traders? Come on, tech. So as far as the NQ is concerned, I'd be looking at a chop zone between the overnight high around 21,830 down to this node down here around 21,730. That's sort of your chop zone right there. They got to get above the high with new buying if they want to keep going. They got to get below the low with new selling if they want to pull back. Otherwise, probably at least an hour or two of sideways here inside this overnight range between 21,730 and 21,820. It's getting chopping here. We'll squeeze the overnight. There we go. We just squeezed all those overnight longs. Okay, so now we're right back to our closing price from Friday. So all of those longs from the overnight, they're gone now. They're like, oh, damn it. So now we are looking to turn this area around the 59.96 to 59.98 area into support and come right back up. Let's see what happens. Good morning to Sook. Welcome, welcome. Fighter pilot in the house. He says, see the banner all the way at the top of the screen? Join. Thank you, fighter pilot. Learn and improve your understanding of the auction process and the profile, giving you knowledge and more peace of mind. Dude, truer words have never been spoken. Fighter pilot, checks in the mail. Nuwaz says, please make available for India. There are actually a lot of people in India that trade with market profile. So if you're trading the Indian markets, just Google it and you'll find people that are trading market profile in India. And you'll have access to their data. Obviously, I don't, that's not my interest. I'm just laser focused on the ES. So that's what I want to stay focused on. But if you're interested in learning how to trade with market profile, learning how to trade with Bookmap, you can absolutely do it with the Indian markets. And there are a lot of people that will show you that stuff. Okay. So now we're starting to push into this area of potential support, right? Somewhere right here between 6,000 and 59.96. So we will look for a bounce in here for the market to find support and turn around and start coming back up. And then we will ask ourselves, do we get resistance at whatever the halfback is once we do? This is just normal when you're expecting the market to go sideways in the morning. Good morning to Kevin. Craig says, does Bookmap ever have offers or sales days? Yes, absolutely. They do big sales from time to time. Here's my personal opinion. I'm not trying to sell you on Bookmap when I say this, but if you are interested in learning to trade using order flow, you should just sign up and at least for a month, right? Like just sign up for 1 month, pay the full price, whatever it is, you have to pay it that particular month and just check it out and make sure you like it. But they do deals from time to time. Like I know around Christmas, they do deals and stuff like that. And so, you obviously want to take advantage of those if they are there, but I wouldn't tell you to wait until, Black Friday to sign up for Bookmap and just not have the tools at your disposal for the next 5 months or whatever. Like, don't do that. Sign up, check it out. It is worth the money or it's not, right? You will either appreciate it and you will gain value from it or you won't. And you just don't ever know until you really have it in front of you every day and you let your brain spend some time analyzing it. That's the one disappointing thing about these live streams is if you're just watching it for 1 hour a week, it's not going to really help you because you got to build that complex skill. You know what I mean? Which just takes practice. It takes time. Okay. So we got to bounce. Now, anytime we are in a chop zone, and we don't know which way the market is going to break, we watch the halfback. That is 50% of the day's range so far, whatever that is, right? So far today, the low of the day is 6,000. The high of the day is 60.15. So the halfback is 6,008. Okay. So if this becomes resistance, now we are not predicting that it will become resistance. We have no idea. But if it becomes resistance, it increases the odds the market will try to break lower on the next poke to the downside. If it does not become resistance and the market pokes right through it to the upside, it means we need more chop. We need more sideways. We're still in indecision mode. So we got some support. Now we're looking for resistance. Olive says, do you use large passive order in Bookmap as possible targets of the market? 100%. Absolutely. Yeah. So if you're in a trade and you're trying to figure out, where should I get out of this trade, right? Where's this thing, let's say you're long, where's this thing maybe going to run out of steam and come back down? Those large nodes of liquidity are an excellent area for that to happen because this is like the way I like to describe the market. And by the market, I mean everyone, every participant in the market who is doing business combined, right? Not some, magical thing that's in charge and controlling things, but just the market as a whole, right? The market is like an animal that is just hungry and hunting for food. It's like a shark that's just swimming around the ocean, smelling for blood, right? That is all it wants. It just wants to get as many orders to change hands as possible. It doesn't care if they're long or short. It doesn't care where they happen. It just wants as much liquidity to flow through the market as possible. So when you see nodes of liquidity, these large, darker sections where there's more orders waiting, those are magnets for the market. It's like the shark will want to go see, it smells that blood, right? It smells that blood in the water. It wants to go see if there's a feast to be had there. So what it will do is it will move towards that node of liquidity. Okay. But there is no guarantee that there will actually be sellers at that node of liquidity once the market gets there, because a lot of times they're spoofing and they just pull orders. So the market is hunting to figure out what is real liquidity and what is not. Okay. So sometimes these large nodes of liquidity act as sometimes these large nodes of liquidity will act as a magnet pulling price to them. Sometimes they will act as a magnet that pushes price away. And so that's kind of what I'm observing. I'm saying to myself, as we add or pull liquidity, what does price do? So let me zoom in a little bit right here this morning. And you can see that price was coming down, got to liquidity, bounced, they added more liquidity lower. What did that do? Pulled the price down, bounced, added more liquidity lower. What did that do? Pulled the price down, bounced. Well, now they're starting to add liquidity above. So the market is like, maybe we'll go up there and we'll get to that liquidity. So what did they do? Boom. See how it gets darker right here? Then what does it comes back down? So these are just magnets that are pulling price up or down, pushing and pulling and pushing and pulling and pushing and pulling. So if you're looking for a place to take profits where you're like, I'm long and I don't know how far it's going to go, that's a great target. Okay. That being said, if when price gets there, that liquidity starts to disappear, you might say, let me move up my target a little bit because they're probably going to blow right through. Just think about it like a magnet. And you never know if it's going to be a positive magnet or a negative magnet, but just notice when those magnets are added to the market, how does price react to that? Okay, so now we are at the halfback. We are looking for resistance. If we get it, we're a little bearish for a pullback. If we don't, more chop, more sideways, more grind. Let's see what happens. Right here, right now, right here. Okay, so they're starting to add liquidity at a higher price. See this right here? So they are trying to get that next move to the upside. They're saying, you don't even have to come down here. We'll bring you liquidity right to price. Well, sellers don't want to short if there's liquidity right below, do they? So that lets the price go higher. Okay, so passing through the halfback means the chop will continue. Another really helpful tool with Bookmap that I'm finding very useful recently is the stops and icebergs, because the way I have my settings set up, it's just showing me the larger orders of stops that are getting taken out. So people that are getting taken out for like 10 plus contracts at a time. And so when I start to see huge stops getting taken out, what is that telling me? That auction might be coming to an end, right? The shark may have just found the bait and ate it, and now there's no more food there. So when I see really large stops getting taken out, if the market doesn't immediately keep going in that direction. So let's say, I mean, we don't have an example yet intraday here, but let's say there had been a ton of stops, right here at the low, we get the little bounce. I'd be saying if they can't immediately get lower, then the market's probably going to reverse and come back up because they were coming down just for that liquidity, those stops. And now they're done with that and they're on to look for the next set, which is usually the other direction. So the stops, noticing where those are, especially those larger stops, very, very helpful in recognizing where there's a potential for the market to reverse. And again, we don't have that this morning, but if any examples pop up, I will say so. It's so choppy. Very choppy. People hate when I sing this song because it sticks in their head for the rest of the day. Okay. It is choppy out here, folks. Supporty. Okay. So what are we suddenly seeing in the order book? Right above price. Somebody is piling on orders right here at 60.10. What are they trying to do? They're trying to scare price away. They're trying to say to buyers right now, there's no reason to go long. here at 6,006 because you're not going to make it past 6,010. We're going to stop that from happening. So this is a little bit bearish to see. As long as it's still there, it is likely to push the market back down towards the lows. Now that's fine. We're in a chop zone. So pushing down is not bearish. Bigger picture, it's just a little dip to bring in buyers. Let's see what happens. These may actually fill. These may be real orders here rather than something that's going to spoof. Nope, it spoofed. Kidding. Just joking. Boop. Yep, didn't let it fill. It was all a game. Sniper Trader says, what is the annoying thumping? Well, I'm sorry that you find it annoying. My thumping takes no offense. Hello. Yeah, that is the volume pressure index. I can turn it down a little bit. Turn down the volume just a hair for you so it ain't so thumpy. But yeah, what that is basically showing us is, the volume pressure imbalance is showing, are there more buyers or sellers, like second by second as we move through the day? And that's really important because the only time, the way I've got it set up here is that it's only going to make that thumping noise if we get above 95%. The only time you're ever going to get 95% of the participants doing the exact same thing in the exact same moment is when it's sweeping the order books, right? And sweeping the order books is a way of clearing out that liquidity. So if you heard it a second ago at up here by 60.10, that was probably taking out stops, and then we reversed right back down. So I just use it as sort of a reason to pay attention to the market. So like, let's say it's the middle of the day and I'm thinking, I want to take this trade later, but the market's not there yet. So I'm like watching YouTube videos and I'm distracted. And all of a sudden I hear that thump, 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 thump. I know, shit, something's happening with the market. We're sweeping the order books. This might be my opportunity to enter the trade. Let me take a look at the chart. It just kind of keeps me focused when I start to get distracted. The question is Bookmap available in India? Yes, it is. As a matter of fact, I think they have some Indian people that do live streams from time to time. Not frequently, but occasionally. But yes, it is absolutely available. Frito says it's only annoying because he doesn't know what it is yet. That is true. Guillermo says, no, keep the volume up, please. Sorry, guys. It's like mixed requests. I don't know what to do with myself right now. Catherine also says she loves the thump. Uh-oh. Sorry, Sniper Trader, you've been outvoted. People like the thump. They like to know what is the moment where it is important to do business. What is the moment where something changes suddenly in the market, and this could be an opportunity. They don't want me to turn that down. They don't want to lose it. It's back, baby. The thump is back. Okay, so this is not a reason to go short the market, what I'm about to say, but it does seem bearish to me that we cannot get back up to the opening price. We should be able to bounce around in here pretty easily. We should be able to kind of boop, 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 bounce around inside this overnight range pretty easily. We came down easily. You guys were here. We came down in a matter of minutes with very little support. It came straight down. But now it's like really having a hard time trying to go back up. So that is kind of like a first indication that we might be building up some bearish momentum. It is too early to say, so don't short the market right now. You know, anything can change at any moment, but I'm just noting this slow tempo right at the halfback is like, this is not bullish, right? This is not buyers desperate to be long the market. This is like fear of being long the market. So this tempo is a little bearish for now. Let's wait and see how things play out. Let me pop over and take a quick look at the Q and see if it's the same story. No, see, the Q is back up through their opening price. So this is a great moment for the Q. If they can get above the overnight high, 21,826, there's a potential for the market to go much higher today. First, they'd have to spend time up there. Then they'd have to bring up volume. Okay, until they get above, it's still a chop zone. Home improvement expert says, I use Tick Strike and got my own thump going on. Well, then things are about to get very thumpy for you. It's about to be a thumpathon up in here. Tim says, what percentage of your trades are during the first hour versus after? Seems like you use the first hour for figuring out direction. Yeah, I would say not a lot. I would say maybe it's like less than 10% of my trades are first hour. And I could make that like, I can make those numbers very, very different if I can add a nuance to it, which is the market opening inside the previous day's range, or is it opening, above or below the previous day's range? So if we open with a gap, then I probably have like a 50% chance of taking a trade, in the first hour on that day. But if we open inside the previous day's range, there's like an almost 0% chance I'll take a trade, on that day in the first hour. It's just about what information is the market giving me? Is that information useful, right? When you open in the middle of the previous day's range, okay, we open right here, and the overnight spent the whole weekend inside the previous day's range, there is no edge. Like no one on planet Earth knows for sure if the market's going up or down yet today. So we have to spend some time balancing. We have to spend some time playing tug of war, trying to go higher, trying to go lower, and then see which side breaks, which side gives up, which side gets squeezed. Then the market makes its move. So if we're opening inside the previous day's range after the overnight spent the whole night inside the previous day's range, there's no reason to force trades first thing in the morning. I talked about that. If we're going to go higher today, there's a 20-point move above yesterday's high to be had. So I don't need to feel a need to go long in here. I can make plenty of money up here once the market generated information confirms it has a high probability of working. Okay. But if the market opened above yesterday's range and it opened up here, that's totally different context, right? Where the market may immediately start to trade higher. So I don't have time to wait around and make a decision. I also have way more information because the gap up is telling me we have momentum up as opposed to opening inside the previous day's range. Okay. So I always I know guys get sick of hearing me say it, but everything is about context in trading because the market is random. What it does on a day-to-day basis is completely random. Sometimes you will have things in TA where like every single thing looks like it's a certain thing. Everything tells you the market's going to go up or everything tells you the market's going to go down. And then it just does the exact opposite. And you're like, what is this? That is the randomness of markets. Okay. And so you have to find ways to deal with that randomness. Putting things into a context can give you that edge. And in this case, that context is, are we in the previous day's range or not? Do I have an edge or not? Okay, so we just got this big node that popped up here around 60.26. So now I'm asking myself, this is far enough away from price that it can be a target to pull price to it rather than reject it away. Okay. So the question is, does the market now start to get support? Do we start to make higher highs? Can we start to move in that direction? That would be bullish to see. And then once we start to get the move, does this suddenly disappear? Just like this one. As soon as it disappeared, what did the market do? Never mind, right back down. That same thing could happen. So, for example, the market starts to push up, gets to the opening price, that suddenly disappears. Guess what the market does? Comes right back down. So people always want me to tell them how to use Bookmap as a way to like know to go long or short. It is all context. If you're bullish, do you want to see that pop up? Yes. If you're bearish, do you want to see that pop up? No. You know what I mean? It's just context. Sheena says, what symbol do you use on TradingView? My chart doesn't match yours. I think it's just the continuous ES contract. So ES1 exclamation point. And that's the full 24-hour contract being shown as one daily candle. So you might be saying to yourself, Charles, I'm about to lose my freaking mind. We have been going sideways in one tight range for 15 minutes and I want to murder somebody. Why won't this market just go somewhere? Balance leads to momentum. Remember that. So if you're finding yourself frustrated because the market is going literally nowhere and it's stuck inside this range, guess what's going to happen when we break out of it? It's going to get a move. Okay? So just remind yourself of that you sit through the balance to get to the moment where you get momentum. And that's where you start to take those trades. It's so choppy, very choppy. I guess we have no exciting news dumps this morning. Nada. Okay, there's some stops. Finally, we took out some big stops. So this is an example of how you use the stops. Okay. The market comes down and it takes out somebody who was long 81 contracts. It stops them out. If it's going to keep going down, it's got to take out more than that the next time. It's got to take out like 150 contracts, and it's got to take out 200 contracts, and it's got to keep taking out bigger and bigger orders. If it can't, that's when it turns around and starts heading up. So on the next push lower, as they cross through 6,003, we'll be seeing, do they stop out more buyers down there? If so, they can keep going down. If not, this will probably be around the low before we turn around and head back up for the opening price, which it looks like we're doing right now. As me speaks. If you guys have enjoyed today's live stream, if you found it informative, I highly recommend you check out the Pirate Traders Brigade. You can see the link at the top of the screen. It is piratetraders.io/join, and you can sign up. It's $20 a month. Okay, so we're talking about less than half a point on the ES. You can make half a point of profit over the next month from something I've said. You've paid for your membership. If you can just avoid a trade where you would lose half a point, you've paid for your membership. I do these live streams every morning for the first hour of the day where I, describe my scenarios for how I think the market is going to play out over the day. Like I did at the beginning of this live stream. I send out a daily email with levels to take profits if you're in a long or a short, targets to the upside and the downside. And I also do these live streams, every day. So if you are interested in joining the brigade for just $20 a month, you might be able to hear me keep explaining stuff. We'd love to have you. If you are a member of the brigade, it is time to head over to the private stream and set sail on the ocean of profits. That is the Pirate Traders. If you are not, head on over and check out Bruce's stream. And I'll be back here on Monday morning next week. Thank you all very, very much. I appreciate your time. As far as what to expect for the rest of the day, you can literally just go back and rewatch the first 10 minutes of this stream and you'll see what I'm seeing. I am bullish, bigger picture. I think the market wants to go higher. I think it wants to break to the upside, but inside yesterday's range, we're getting balance. So that means I think the market wants to go up, but it's just not ready yet. It needs to spend however long it needs to spend. So basically, not intraday, but as sort of like a swing trader on a multi-day basis, as long as the market finds support somewhere above yesterday's low and is able by some point today to make a higher high, I will be bullish on a swing basis. If we make a lower low on today's, a lower low from Friday's range today, that is very bearish and the market's looking for a bigger pullback. So today I'm expecting a lot of sideways. That's it. Until we break one way or another, we're going to keep balancing. That's just what the market does. And everything so far this morning, tempo and volume, is all telling us we're still balancing, right? Look at today's range, just what's happened since the market opened. We tried to go higher right to the place where they ran out of steam in the overnight, and we immediately ran out of steam and came back down. We started to go lower, couldn't even get to the area where they ran out of steam in the overnight, immediately came back up. Since then, we have spent all our time and brought in all our volume right here in the middle, which is ding, 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 exactly the same place as Friday, right? This is what we call the point of control or the fairest price to do business. So if today the market is just stuck in the place that was a fair price on Friday, it means indecision. It means nobody is confident. Everybody's just kind of gambling. Jim Dalton refers to this as short-term traders just picking each other's pockets, right? That's all that's happening right now. So we should assume that that is going to keep going until we can finally break out of this range. Keep an eye on the overnight low, 59.93 for a potential reversal there. Keep an eye on the overnight high, 60.20 for a potential reversal there, and expect a lot of sideways and a lot of chop in between. Thank you very much, and we will see you here next week. Brigade, let's